Good morning, trading world. It is January 18, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. So, getting into this morning, and excuse me, I actually did the pre-market analysis yesterday, or like early evening yesterday. So we're going to have to make a few adjustments, but not much. We'll explain it when we get to it. But just as a reminder, coming from last week, we are not done with the awkward time frame cycle. So this means lots of two-sided trade still to come. We ended Friday with the makings of a dead cat bounce. And for those of you who don't know what that is, it's basically a rally that begins and is made up of mostly short coverings. We will be watching to see if it can gain legs and continue coming into this trade week. Looking at the pre-market, obviously not. So, something to be aware of that will let you know we have another volatile week is the weekly expected move. Last week's move and this week's move are nearly similar in size. However, this week we only have 4 trading days. So that is saying something to me. If we can move the same amount or more as last week and do it only on 4 trading days, that has to speak to you and tell you to prepare for a volatile week. Lots of movement ahead. Continuing into earnings season, we need only watch 2 things. The only thing that I'm really concerned with right now is big tech. You can watch that using the QQQs or XLK, and then the financials, XLF. In the video last week, I believe it was this past Monday, I pointed to a preview of what will happen if Teck continues to deflate and XLF decided to join in with the tantrum. This will be what could drag the entire market down for today or for the week. So I'm not really big at looking, especially when I have this much action in the indexes. I'm not really big on looking at individual stocks, because right now when you get moves like this, the biggest play is arbitrage, and that's by moving the basket, by moving a couple. And really right now, I usually look at the sectors, like I just pointed out, XLF, XLK. There are a lot of banks that are going to be coming forward with earnings. And as I said last week, I don't really trust the earnings numbers for the financials. Even if they blow out earnings, it's going to be a scenario where you pretty much get where they bought the rumor and they're selling the news. So regardless of what they report, I'm looking for a decent sell-off in the XLF as a whole, to kind of drive us even lower. So that's going to be what to look for. And I've stated this many times, there's a tug of war going on between XLF and big tech, and the S&Ps are stuck in the middle. So as they decide to drag or fight, eventually the S&Ps are going to follow the winner. And Teck is just too big. So even if we get this pop by XLF, when Teck starts to go down, they're large enough to almost drag everything down with it. Now, let's get into key levels to watch for today. Now, usually there's a written rule when it comes to support and resistance levels, or as I like to say, decision levels. When you get below support, it then becomes resistance. It's no different here. So being that I did the research on yesterday, we're just going to convert a support level into a resistance level. Starting on the resistance side, we have a jack resistance of 463 through 462, queen resistance level of 466 through 467, and king resistance level of 468 through 470. And just in case you're curious, there was another level above that, which would have been 471 through 475. Coming down to support, jack support is now going to be the 460 through 458 area. Queen support is going to be 455 through 453, and we'll make a notation here because there's not even enough room to get it down on the chart, but we're going to say king support is going to be 451. So those are the key levels that I will be watching today. The battleground areas, which would have been to go lower, would have been 462, but obviously we broke through that. And instead of going higher at 466, we're going to move that to 463. Keep in mind we have major channels below us, or was below us at 463, and above us at 470, and then we had a minor building at 465. So, it's not going to let me click on the drawing sets, but let's go into today's scenarios. The most probable scenarios for today. The first of which is going to be a trend down day type structure. And with the volatility, it gets harder and harder to differentiate the day types. And that's only because of volatility. It increases the range size as we get to where we're looking at energy in the higher time frames. We're starting to do what's usually done over a week in just a day or so. So because of that, it makes it very hard to differentiate the day types. But let's get into a downtrend day. Being that we have or expecting a downtrend day, a key level in determining a trend day is going to be the previous close. The previous close from Friday was 464.72. So we're going to put that here as the previous close. And what we should get if this turns out to be a downtrend day is that we're going to get basically what's going to seem as a rally going into and just after the open. And we're going to rally up and we should find resistance either on or before that 464.72 area, before the previous close. And if this is indeed a trend down day, we're going to reverse, and this is going to be the major trend for today. We're going to see a strong trend down mid-morning all the way to a midday chop, and we're going to move sideways coming into the lunchtime period. And once we get that lunchtime period over with, we should experience a head fake to continue down and then a slight rise going into closing with a reversal somewhere at or around the close. So that's the downtrend scenario, downtrend day type structure. Now, the next probable scenario is going to be the expansive range day. Range days have many different variations. And just to go over the basic range day principles is usually we establish a high and then we establish a low or vice versa, and we basically chop back and forth between those. But with the volatility, we could see an expansive range day, where basically we establish what you think may be a high for the time being or a low for the time being, but at some point we push those boundaries. So looking at what possibly could be an expansive range day is if we push up above yesterday's close and chop, and then we're going to chop back down toward where we may find support, and basically chop back and forth for a majority of the day. That's the basis of an expansive range day. It could stop here, it could stop here, it could stop here, but at some point we could possibly push above those areas or those boundaries for the range day. So to me, those are the two most likely scenarios to prepare for today. Again, volatility will constantly push the ranges that we see each day, making it harder and harder to identify day types. And you will feel like you had 2 trading days in one day, where it will feel almost as if we had a powerful uptrend day, and then in that same day it'll feel as though we've had just as a powerful downtrend. So those are the things to watch out for. Also, just as a reminder of the ranges, let me bring out the map here. All right, this is our map. I kind of alluded to this earlier, that we had a major channel. Where was it? We had a major channel below us at 463, but as you can see, we've already broken through that channel. The next major channel is going to be around that 454 level. So at some point we're going to head to that level. This is probably going to be our resistance. We have a lot of overhead resistance because this was a previous trend channel that we were in. So this 464 area, along with 460, let's say 465, 466, because there was a minor area being built at 465. So keep in mind, if we have an expansive range day, we could pretty much do one of these to the 465. That's pretty much how the week could possibly shape up. So, as always, define and know your risk, and profit will come. Wishing you a successful trading day. Have a great one.